Good day, everyone. Well, the market averages appear to be making another correction, and this is not surprising because the markets seem to have trouble getting into any meaningful sort of uptrend since December. And so the question now is, with the averages trading under their respective 50 DMAs, if this is going to be a shallow floor like we've seen many times before, or is it going to actually produce a meaningful correction where we can actually make some money on the short, rather on the sell side by playing these inverse ETFs. So far, we have a stack of distribution days in the averages. Leaders were giving us clues that not all was well. They've done this before. Markets have done this before, where everything looks like it's going to really break down to an open hole, but somehow markets always regain their footing, and that somehow is really the QE factor that's been part and parcel of the market since 2009. It prevents any meaningful correction from happening since really 2012. Now we see that the global economy is still having a lot of difficulty. The Fed is reactionary now to economic reports, so this could induce some added volatility in the markets depending on which way these reports go. But so far, as an aggregate, the global economy is having difficulty. And if you look at the baskets of commodities and whatnot, they're trying to find their footing, but it's entirely possible they're going to roll over again. And things like the price of oil, mirroring this basket of commodities. I use USO here. You can see that it's trying to find its footing if you look at the weekly down here. But not convinced yet. The global economy has to really turn around meaningfully, and then maybe we'll start to see a meaningful rise in commodity prices. But we all know that China's having difficulty. Euroland's in recession, and U.S. and U.K. are producing economic statistics that are questionable in some cases. So where does the reality lie? And I think the Fed knows that the economy is very difficult right now. It continues to be. So they're going to be as gentle with rate hikes, I think. They really want to err on the side of caution. So I think QE is here to stay for a while, even as we start to see, I should say, when we start to see a turnaround in the economy. But it could be further down the road than we think. I'd like to get into talking about some of the stocks that were actionable in the last couple weeks. There's a couple here that, with an MDM on sell signal, it means you should be keeping your stops extra tight. With this VRX, we recommended it on this day. Then it had a nice run. It has had a constructive pullback, and it's to its 10-day here. So it's not necessarily a stock that you had to sell. Maybe you sold half because you didn't like market conditions, but it hasn't really done anything wrong yet. And keep in mind, this is in context with the overall major markets, which are in downtrends. There's another one we recommended on the 29th, so that was back in here. And it too is trying to buck this downtrend. Here's one that actually has done a great job despite lower markets. We recommended this one before the gap up on this day. Then it had the viable gap up, and now it just wants to go higher. So there's no reason to have sold a position in this one because it just hasn't done anything wrong. Then we also have Fortinet, FTNT. This was recommended on the viable gap up day here. And it hasn't gone anywhere. It's just going sideways. But relative to the markets, this is a sign of strength here. So if you still have a position in this, you might want to sit tight with it, knowing also that if it breaks below the low of the gap up day, you don't give it any kind of room. Just sell it if it breaks below that low. And that means from where the price is trading now, if you have a position, you risk 2.5% in your position from where the stock's trading, which is pretty small. And usually that's within most people's risk tolerance levels. We got an email from someone who wanted us to talk about SEDG. This is one of the solars. The group has come back to life to some extent, but if you look at I don't know. I mean, there's nothing to do with this one. There's absolutely nothing to do here right now in the stock, but it's
Hey,
worth
Dr. K.
keeping an eye on.
The
Hey, can you hear me?
the thing to
Yeah.
do with that stock was to sell into the jack 4 days ago. So if you're sitting there holding a stock that's moving like that, if you bought it off the 10-day, say for example, and it shoots up, and you're not selling into that, you're kind of slow on the uptake there because we know we don't buy strength in this market. Anyways, I just thought I'd interject that. Go ahead, carry
Yeah,
on.
no, it's absolutely because as we've emphasized, you have to take your profits when you got them in context with the chart. So with this SEDG, I mean, it gets way ahead of itself by going all the way to 30, and you want to be selling on a day like today, like on that day, because relative to the stock chart, you can see it's ahead of itself. And the group itself, I look at some of these other ones in the group, and I'm not all that impressed. And as far as this one, yes, it does have some impressive fundamentals. It went positive finally for the last 2 quarters, and the earnings are kicking up very nicely, triple-digit returns quarter over quarter in sales. So this is one to watch, but there's nothing to do with it now. You shouldn't be owning this, but do keep an eye on it. We are. There was one other, and that was G Pro that was sent to us by email to discuss, and you can see that it's a bottom fishing one. It had an earnings report, so gapped up on the earnings report, and then it undercut by more than a couple percent. So you should not be sitting on this one at all. You should have sold it out by now. If it can turn around, form a constructive formation, and issue some sort of pocket pivot, it is a bottom feeder. It is a bottom fishing, what we call bottom fishing pocket pivot. So you have a little bit more risk in that case. So I'm not real excited about this name overall. Gil?
I think on GoPro, the basic issue is that it didn't hold the Bible gap up. If you bought it down lower along where the pocket pivots were, you're still actually up. So it's actually up above where it was before the earnings report. But if you look at the weekly chart, it may need more time. Even if you consider it has a chance at rounding out a new base, given all this breakdown here, I don't know if it's just going to bottom real quickly and head back to the upside, maybe a little slower, assuming it even works. But for the most part, the long side hasn't really worked out over the last couple of weeks. And you could see it in the indexes, I think, last Friday. Because as I said, on Friday, you had the market up. It was last Thursday. Figured we're going to move lower. And you do get a blip up for a couple of days. But the big key here, the day to go short heavy was on Monday, when you had this sort of stalling and churning day on weak volume. So it closed at the low, and then you gap down. And if you look at that on a candlestick chart on the NASDAQ, that's actually what would be called a evening star type of formation. So you blow to the lows and you undercut these lows. Now you're trying to bounce off the lows, which makes total sense. And so you may try and rally off the lows. And it's hard to determine whether you're at a low or whether the market's going to find support and find its feet here and turn higher, or whether we're going to go lower. And a lot of people are expecting, I suppose, the Fed to have to keep continuing or starting to raise interest rates here in June. And the big number is going to be the jobs number tomorrow that may figure into that. My thinking is I'm going to take a stance slightly different from the crowd, and I think that general idea is that if you see strong data and the Fed is going to raise interest rates, the market's going to tank. And that's kind of the crowd expectation. So my view is that maybe if the Fed were to raise interest rates, that would take a great deal of uncertainty off the table, and you would get that other, and the market could rally. And so you want to keep an eye on things that are potentially setting up. I think for the most part, we've seen a lot of the strong areas break down. So for example, the cyber security stocks all got whacked when Qualys, and I think Qualys shows you why you don't want to buy the smaller, thinner names in any group. Go with the bigger, thicker leaders. I was pretty suspicious of this one, even though it was going higher and it looked great on this day before it blew up. But a smaller, thinner name in the group, go with the big quality leaders. And so cyber is one of them, and all that's really doing here, if you look at the weekly chart, it's got a 2-week handle now. Earnings come out today after the close, so we get to see what happens then. Maybe you get some sort of gap up breakout. but I would be wary of a standard breakout, as I am with any standard breakouts, because you know where those go, nowhere in this market. So Palo Alto Networks, you had a nice breakout there, but it's dropped below the breakout point now, and comes out with earnings later in the month, towards the end of the month. So if anything, you'd be buying it at the 50-day and trying to get a trade off the lows. So there's nothing going on there. You had also FireEye came out with earnings, but it's violated its 50-day moving average, broke down on earnings. So who knows? Here's what the weekly chart looks like. Who knows what it's going to do from here? Maybe it finds its feet and tries to truck on back up. But for now, this thing is off the table in my mind as a long. And then the other one, Fortinet, which is actually one of the true leaders in the group, believe it or not, because if you can see from the weekly chart, it's continued to move higher and has actually held tight over the last couple of weeks while the market has gone nowhere. So in my mind, this is one of the more viable names in the group, and it's acted better overall compared to the breakdown we saw the other day in most of these stocks. So this is holding up tight. Maybe it goes 3 weeks tight and it tries to come out of here. So I think the one exception, and Dr. K, you can chime in here if you've got any other ideas to offer on this, but my view is, okay, you get a viable gap up, and the idea that after 6 days it should go higher, and if it doesn't, it's suspect. I would say maybe so, but not if the stock is able to form a 3 weeks tight formation. So if it were to go tight for another week and with excruciatingly tight closes here, I think I would look at that as being constructive. So especially when you consider the context of the market is weak over the last, say, 1 to 2 weeks. Well, let's just say 1, 2, 3, 4, 5. Yeah, about 10 days over the last 10 days. You could even say today's part of the weakness, not really much of a bounce, a little bit of a bounce today, and really going nowhere ahead of tomorrow's jobs number. So within that context, this thing has held up pretty well overall, and it's one of the better ones. But for the most part, you've seen the group. Go ahead, Dr. K. You were saying?
Yeah, I was just saying that, at the beginning when I brought that one up, everything's contextual and the market's been in a downtrend, yet this one can go sideways, which is a sign of strength. Therefore, if you're sitting in a position, there's no reason to sell it out here.
Right.
Your risk is 2.5%, so you might as well hang on to it. It's overall, it's looking like a champ in context with this market environment.
Yeah. So, but everything's relative in this market because that's all you're really getting. There's no real powerful upside moves that you can play. Most everything is just chopping around. And what happens, like you get a pocket pivot in Skyworks Solution last Friday and it breaks down. Ugly duckling look, it's failing. Now it's back above the 50-day. So, that's not surprising. Jose's doing well today, although I guess you'd call this a viable gap up, Dr. K?
Well, I put out a report on this one, and as I said in the report, you might want to just keep this on your watch list, not take any action, just simply because the markets are weak here. And at the time of the writing of the report, it was trading the lower half of its trading range. It seems to get support just under its 50. So the question is, if the market has a strong finish, and this does too, do you want to take any position in this? It might be a bit premature. I think it's one to watch. That's what I'm doing with this. But again, if you want to take a small position knowing what your downside risk is, and I said in the report, you don't want to give the stock any porosity. I mean, if it gets below the low, if it trades below today's low in subsequent days, you should sell it out completely. So in other words, you're not risking an additional 1 to 2%. And where it's trading now, 75 and change. So you're looking at a few percent risk in dealing with this one at current levels.
Somebody asked a question, with the MDM on a sell, would your model use days like today to accumulate inverse funds or just take a full position when the model turns?
All depends on your style. Everyone's got their own trading style, their risk-reward levels. Some people like the size in, the position in to ETFs. Some people just go all in. My style is all in. I go all in or all out, depending on the model signal. But that's my style. That works for me. I'm comfortable with it. I know what the drawdowns are. You can see, get a sense of drawdowns looking at the historical returns, and then see if you want to maybe mitigate some of that risk by position sizing into an ETF on a buy signal.
Okay. Somebody's asking about Zyop. I don't know what there is to ask about it. There's nothing going on here. Stock failed at the, it tried to bop above the 50-day on a pocket pivot, and that failed immediately. So there's, that's your sell point right there. So there's nothing going on with this right now. I mean, you might consider, okay, maybe it's building a double bottom, but that's not clear right now. And it's definitely hanging below even the 65-day exponential, 10-day, 20-day, well, the 20-day, and it's hanging along the 10-day. But I don't really see anything here that I'd be buying myself. But, biotech group is under pressure, and that was a hot group, and, it's hot until it's not. Shake Shack, well, that's a beautiful run, and now it's broken the 10-day, so I don't know. Did you take profits? Maybe, I don't know. You have to decide what your objectives are for the trade, but I'm not sure I'd be buying this pullback. Markets cruising, we're up nearly 100 on the Dow. Nasdaq's up 23.84, so nearly 0.5%. Looking at some other names, Facebook is at the 200-day, so it makes sense to me. If this turns out on the weekly chart to be a late-stage failed base, then given that Facebook is such a loved and lovable, no doubt, stock that everybody just believes you have to own it long term. It's the greatest thing since sliced apples, and it's probably going to bounce back and forth in here, and that's what I'd be looking for. So I actually, if I was shorting it, and I was campaigning this on a short side on the way down, now at the 200-day, it's possible you get a rally back up to the 81 level and the 50-day. That's very much a possibility if the market tries to bounce. And I think you're still, with the Fed still being news dependent, I think you have to not get locked into a rigid point of view on the market itself and just kind of play things as they lie. For the most part, though, I can tell you the long side doesn't seem to be getting much traction. I'm watching Splunk here because you got this big, ugly formation, and it's pulling into the 20-day on volume drawing up, earnings coming out at the end of the month. I wonder if this thing's going to try and rally if the market turns, so kind of keeping an eye on that one. Mobileye comes out with earnings next week, but notice how it had a gap up move here, and you come and test the lows of that. Volume is drawing up sharply, so this might be the spot to buy it. The only problem is you're going to have to sit through earnings roulette next week if you want to do that. Data is one that we've been looking at on the short side. I thought this was a short on this rally up above 100. And now you come into the 50-day, that's a cover point. So now going into earnings, I think today after the close, I'm not going to do anything with this stock. The one that's getting whacked today, and this one, Data and Workday, were both moving on the CRM news that someone's going to buy them out. Last week there was an announcement that they had hired a banker to evaluate some of these offers or an offer they were getting. They say it's SAP, Oracle, Microsoft. I think the latest news says it's Microsoft, so whatever, it's affecting these other stocks. And so what I do is I watch this to see how it plays out in these other stocks because I think it makes them shortable. And Workday found resistance just above the 92 level, so if you're hitting it short there, that's working a little bit. But like with anything in this market right now, everything is just short term and small moves and day trader type stuff, maybe 1 to 2 to 3 day trades. There's nothing substantial. There are no big trends. There's no big money trends, as I would say, and nothing really moving in a manner that would make me think that I'm going to be able to make big money one way or the other. And so how long the market stays in this sort of mushy back and forth channelized state of being remains to be seen. Somebody's asking about CRTO, another thin stock. It's all over the place. I don't know. It had a pocket pivot right here, so it's moving higher, but not necessarily going to break out. But Splunk, I guess person making the point that Splunk is the same ilk. Well, as long as it's an ilk that goes higher, I'm all for it. So Netflix, I thought was a short into this gap up move the other day. That was a pocket pivot move, but we didn't put an alert out on it because it looked suspicious. Merrill Lynch, Bank of America put out a buy on the stock, which sent it out. And Merrill's what my old firm. I started at Merrill, but it's basically a hack retail outfit, and they put out recommendations at the wrong time usually. So here's the thing coming out. I thought it was a short, and it was good for some Skrilla, a few points. Livermore might take 10 points out of something like this on the short side, a little more, 10, 12 points. and that's nice, and it's still coming down again today, but it's filled a gap. Who knows what it does from here? But it's possible it could fail. I mean, if you look at it, it's a big sort of deep, ugly pod-like cup with handle where you had a breakout. It's holding in tight, but you know, it could always fail from here if the market got into more trouble. But you know, we'll see what happens. Other names I'm looking at. The Sedge, they come out with earnings, I believe, today after the close. Is that right? Let's take a look here real quick. $5.7, yeah, so that's what it says right here. So that's what I've been looking for. You're down to the 20-day. I don't know, buy 1,000 shares into earnings. Maybe you'll get lucky. Or, you know, a 2% position or 1% position, something like that. I don't know. But only if you're feeling lucky. So, you know, the other names in the group, I think the storage thing, these guys are partially into that, the Sedges, and the straight solars all got whacked, and here's a breakout. This thing's looking lovely here on a pocket pivot breakout, but it doesn't last. And that's so typical for this market. You know, people buying breakouts, if you haven't learned by now, I think you're an absolute fool. Because here's another breakout right there on a pocket pivot, and guess what? It fails and not going anywhere. The other solar, Canadian solar, is another big one here. Trying to break out here on a pocket pivot. Look at how all these looked good at the same time. And you could be sucked into the strength, but the only issue is I never buy on strength. I'll never buy a move like that. I might buy it on the pullback afterwards, and if it quickly drops below the line, I'm out rapidly. And that's really the only way I'll buy things. You know, somebody asked me a question, do you buy on only the right side of the chart? Or I buy wherever there's a pullback that I think is buyable. So generally, though, since the stock is always at the right side of the chart, I would have to say I buy pullbacks on the right side of the chart. But, you know, maybe I could buy this pullback. Actually, I'd like to buy this pullback, which is more to the left side, but a little late for that. In any case, let's see. Do we have any more brilliant questions out there? Okay, let's go through some more names. Twitter. I have to laugh because on this day, this very day right here, on April 7th, 2015, I believe you can check it on the headlines, this hedge fund guy who'd been shorting the stock went on CNBC and told everybody that he had covered his short, he was now long, based on his incredible analysis, which you look at something like that, and I remember thinking at the time, okay, this guy was short the stock for the, you know, off the lows and getting his head handed to him, and now he suddenly decided to go long, and I'm thinking, this reminds me of Whitney Tilson and Netflix. He was short Netflix all the way up. Finally, when he covered, that was the top, and Netflix broke down from there back a couple, 3 years ago, and Netflix had a nice dive from there. So, you know, these hedge fund guys, they may be rich, but they're not necessarily all that smart. I think that most of them are closet indexers, and they're very good, for the most part, at raising assets and putting on a good marketing show. So, a lot of the hedge fund business is precisely that. Scraping for those fees. 2% fees on, you know, $1 billion in assets is a lot of money. So that can work out pretty well if you want to play that game. And I think most of these guys are not that smart. And they're smart guys, but I don't think when they're making big calls, big gutsy calls and going on TV like that, I don't know. I tend to look at it in a contrarian manner. Tesla. I think, okay, I thought Tesla was a short this morning, and around 224 it's gapping down this morning, and then it goes all the way, in pre-open, all the way down to the 20-day, opens down there, and right there, that's not really a point to be shorting at. You know, you want to short it close to the 200-day. Now we're sitting just above the 200-day, and I'm thinking this may morph into a buy here. There's still a lot of short interest, about 28 million shares as of the last reported date. So if the shorts don't get what they want in the near term, I could see this thing moving higher. So, you know, on the weekly chart, this is what it looks like down here. A little churning. You know, we'll have to see how it resolves this week. If you end up at the top of the range or even out to newer, higher highs on decent volume, you know, the stock could head back up to the highs of this big base and form a big cup. That's a possibility. You know, I think personally, if you had to look at it in an absolutist sort of sense, looking at valuations of other car companies and coming to the conclusion that ultimately Tesla is just another car company, it should be valued much lower. But if that isn't going to happen and everybody on the planet is short the stock in anticipation of what is now obvious, then I think it has potential to rally. So I'm just going to watch the technical action. So, and I own a little position, I think about 25% position right here in the stock, as I got a sense of it turning off the lows earlier and issuing a 620 buy signal on the 5-minute chart. So hopefully talking about this so much doesn't end up jinxing me. But if we take a look at this on the 620, we can see that, oh, it's starting to give me a sell signal. Well, you had a buy signal down here off the lows, and it's hanging out. But if you're in down around here, closer to the buy signal, then you could probably hang out. Maybe it just kind of flips around these lows and tries to head higher. But it's fluid, so, and we'll see what happens here. Did you look at shorting BABA this morning? I did, actually, and it could have been shorted on the opening if you were using the 620 chart, because you had a 620 cross around 88 right after the opening at about 645. So yeah, you could have shorted there. So you always want to be watching this chart, I think, when you see something that's previously on a short sale watch list suddenly, or is on your short sale watch list, and it suddenly gaps up on earnings. Yahoo's another one. You had this breakdown at 44.50 or a buck lower now. So, you know, it's useful in terms of handling shorts into these gap up moves following earnings. So, and a lot of this stuff is day trader technique. I use a lot of this stuff to trade currencies these days, and I'll just show you something really quickly. Let's go up to, this is my currency trading platform, MT4, MetaTrader 4. It's pretty common, but you can see the orange line here is a 6 period and the light blue line is a 20 period, and you get a cross here right after the New York currency markets open. So you buy that, and it's still an active signal. London just closed, and New York will close at 2 p.m. my time, which is, I believe, 5 p.m. East Coast time. But the signal's still active, and the currency's continuing to move higher. And I've noticed in this particular environment where all of the nations of the world, the central banks of the world, are all in a, as Dr. K puts, a race to the bottom in terms of devaluing their currencies, the 620 method has actually worked pretty well. And you can even see if I had gotten up, usually what I notice is I'll get good signals when the major markets open, London and New York. So you see London opens up, unfortunately, midnight my time, and you get a 620 sell signal that was valid all the way until the New York open. So you can see how the 620 works on that, and it's useful for trading currencies, which I do to keep me from overtrading any stock position. So, you know, I'll buy some Tesla today and see how it works and try to leave it alone while I go mess around with currencies, which are lots of fun. I like the 50 to 1 leverage. That's probably the thing that excites me the most. Just the whole idea of using 50 to 1 leverage, even though my currency account is like 1/1000th the size of my stock trading account. So anyways, fun activities. Dr. K, any word on the UVXY
Yep.
model? Somebody's asking. Should I pull up the UVXY?
It's the XIV, really. UVXY carries
okay.
much risk. It's such a crazy index, but I can.
This is so the inverse. The XIV is the inverse index on this. Is that what you're saying?
Yeah. XIV correlates with the general market. So as they go higher, so does XIV.
Okay.
And the thing is, it's got the right balance to it. So I've been able to make it work so far, but I want to see more data before I go live with it. But like I said, so far it's looking very good. I guess the whole thing with fail safes. I've created a fail safe that I think works very well. So far, it's working well at trading live. So I'll let you all know. I want to keep this going for another couple months. I want to get enough data under my belt in real time before I go live with this. But I like what I see.
Okay, good. Go, nice big outside reversal today. It looked like it was going to head higher, but when it was higher this morning, I wouldn't be buying into it at 22 because I just do not buy anything on strength. End of story. If it's sticking up in the air, I just don't mess with it unless it's a viable gap up, because I can manage risk pretty well with a viable gap up. The closer I can buy to the intraday low, then the lower the risk in terms of having a nearby entry, or I'm sorry, exit point. Let's see, CRM going to be bought out supposedly. I wonder what the price will be. I mean, it's a sure thing, right? So it should be at 100, right? Or maybe they're worried they're not going to get much for the company, but it's holding up. Could have bought it, I guess, on the pullback down towards the 10-day the other day. But what if they don't come to terms with Microsoft or whoever's looking to buy them, and then the stock's probably back down to 68. So I don't know. I just don't know. Variant Solar has been see, these new merchandise solars work pretty well. And you can see this puppy is hanging along the 10-day. I think earnings come out. When do earnings come out? Let's take a look. 5/12, so next week, supposedly, according to this. And remember, these dates are generally they're correct on HTS. I know on MarketSmith or Wanda, the O'Neill products, the dates can be wrong frequently. Ultimately, the best source of the data is the company's website. So if I have a position in something, or if I think I'm going to trade something on earnings, or even hold a position into earnings, like Cyber in January, I thought was holdable. I will check on the company's website just to make sure I'm not caught or blindsided by a date that I wasn't expecting. So, Dr. K. Dr. K, are you there? Yes. In your opinion, remember, just in your opinion, was yesterday's market index action a distribution day or a supporting day?
Well, if you look at, let's just pull up the NASDAQ, for instance, what you'll see is roughly a mid-bar close. So you could argue that, well, maybe it's going to repeat what it did on March 26, where it had a roughly mid-bar close, and that was right at the 50-day. And then it bounced along for a little bit, and then it went higher. In this case, the mid-bar close is occurring below the 50-day, so it's a little bit more of a risky position that the market's in. But like I said, we've seen this kind of behavior before. The markets come off, a few percent, 4%, maybe 5%, and then they find their footing and they start higher. So, but if we're talking technical analysis 101, I wouldn't call yesterday really a day of support. It looks more like a day of distribution because the volume was higher. Same on the S&P. The volume was slightly higher. The close was in the lower half, clearly, probably about the lower third.
Right.
The trading range. So that is a distribution day bona fide on both indexes. So yeah, no, I'm not seeing a day of support. You're reading too much into it if you're going that direction.
Right. In particular, the fact that you close in the lower half of the range. I mean, to even start to think about it being a supporting day, it would have to close in the upper part of the range. BSLR MarketSmith shows earnings on 6/1. Somebody says, well, I'm going to guess that's probably wrong. Check the company website on Vivint Solar. I want to call it Variant, so I don't know why. Okay, Taser. Let's look at Taser. Rock and roll. We really blew it by not putting this on this viable gap up here because the stock's gone higher. But who knew that we were going to get all this amazing publicity for police officers' cameras or wearing cameras and how necessary they are. Although I personally don't think it's going to change, but I think what you're going to find out is that most of the time criminals were being criminals at the time, and if something happened, it was usually because the officer was put in a life-threatening position. For the most part, I think. There's always the exception, but they're being adopted, and I don't know if it's necessarily a solution to the so-called problem. I think the problem is more with the criminals rather than the police, but that's just my view. So, stock's acting well, gapping down into the 10-day line. I don't know if you buy it there. Maybe I'd want to see a volume dry up at the 10-day, so it's extended, but nothing to really do there. I was watching Silica Holdings. The question with oil coming back. Oil's been coming back, right? Yeah, well, it's kind of down there, but it's been trying to come back, and you're seeing some of that in the oils. Go ahead, Dr. K. You were going to say?
It's like the basket of commodities, like the CRB index. It's shaping up the same pattern, trying to find its floor. But I think that'll really be determined by the global economy. I mean, if China's not going to exert much demand on commodities, then I think the price is going to stay depressed.
Right.
And right now, we just don't have enough data. Well, we have enough data to say we're still in a very tough global recessionary environment.
Yeah, so the question of whether oils are going to start rallying about the bottom, you're not really seeing it. So I've been, like I was saying, I've been watching stocks like Silica. You watch stocks like the big names, EOG. They've been acting well. Now they're all getting hit, which probably isn't a good sign. What are some of the big? What am I doing? I'm thinking of the old ExxonMobil or Mobil. Exxon getting whacked. What's your favorite oil out there? How about Fang? So see, there's another one. These were looking like they were trying to come back, and then they've gotten whacked. So dangerous place to be. CLR. Another. See, they're all getting whacked today. So yeah, they were acting okay. Big reversal here yesterday in Concho. I think you saw a similar thing a couple days ago. So the group is still looking grim. So I think the only way you're going to make money in this market is if you're flipping setups and ugly duckling setups and whatnot, and shorting upside rallies in weaker stocks or short sell target stocks, and just flipping back and forth, because there is no real big money trend here, and I've been saying that, and I would continue to emphasize that view, and that is the main problem, I think, for investors. And I think that as long as you're in this mushy Fed data dependent environment, where every data item coming down the pipe is going to be cause the market to move one way or the other, the market's going to key on it. I think I would like to see the Fed just raise interest rates and get it over with, and then let the chips fall where they may, because I think that could relieve a lot of the current uncertainty that I think causes this mushy action, and we've seen it throughout 2015. So I think that it's very very much dependent on that whole. Are they going to raise rates or not? Sort of.
Actually, continue a point that made earlier. Everyone thinks naturally you hike rates and the market's going to tank, but the market rarely does what the crowd expects. And there are studies I've done where the first hike in rates actually is a bullish sign, because it tells the market that the Fed has enough confidence in the economy to raise rates. In other words, they're saying, you know what, this economy is pretty good now. And that, of course, is what the market wants to. The market's guided by the economy in terms of new burgeoning economies after a very, very long recessionary period. And the markets will be off to the races potentially on the first rate hike. But I think the issue is going to be that the Fed's very dovish. I don't think they're going to be doing rate hikes until they see clear evidence of a situation that has improved.
Let's see. So, to me, all that's to say that if they did, in fact, raise interest rates, that could be bullish for the market rather than something negative. And if they don't, maybe we just continue to muddle around and you get this mushy sort of QE oatmeal type environment. So, anyways, other people are talking about, or actually bringing up Schlumberger, SLB, as we call it. RIG, RIG. Yeah, all of these acting well recently, or better, shall we say. I don't know about well. And trying to come up off the lows. But it's definitely not clear that they bottomed. Although you're seeing some pocket pivots. It may take more time. So I think eventually you'll see oil head higher one way or another, whether that's months from now, weeks from now, or years from now. I still think you'll see it end up higher. We already went through G-Pro. Somebody must be late. Not much to say there other than that it failed on the gap up move there, and that's the end of that. Now you're kind of fluttering around the 10 days, so there's nothing to do there. But if you bought this gap up and you're still on the stock, you're kind of dumb, I guess, for lack of a better word, because you had your stop pretty quickly here as it broke down. We already talked about Cuervo too. That's a viable gap up. Let's take a vote. Should we answer the questions of people who are late if it's already covered in the video? Anybody? People say no. Okay. Zaya, how can a stock fall from 14 to 9 and have a relative strength of 99? Well, you have to remember the relative strength is a relative strength. So it's relative to all the other stocks in the market. So if everything's coming down a lot and it's not coming down as much, based on the 12-month price performance, which is what the relative strength rating of O'Neill is based on. And by the way, when I was there, we developed 3-month and 6-month relative strengths that we used also. He never came out public with any of that, but that in some cases was helpful because you start to see the near-term relative strength start to turn before the longer-term relative strength. So in this case, you have to remember it's 12-month price performance, so you're going all the way back to when this stock was around $4. So that's why it still has a 99 relative strength, because over the last 12 months, it's outperformed the 99% of all other stocks, despite coming down off the peak, what looks bad to you. So that's how that happens. Can GPRO qualify for voodoo action along the 10-day moving average? It could, Scotty, but if you wanted to buy it, I guess you use a 10-day as a stop for the stock. But it needs to settle in a little more. I kind of like it more at the 20-day down in here because it tends to hold the 20-day a little bit better than the 10-day if you look at the chart. Once it got up through here, so but it's a little 6 of one and half a dozen of the other. Somebody says Zyop squirts. I like it. Not sure what that means, but it sounds interesting. XON kind of fluttering about before earnings. Smelgene, as I call it, looks like a shortable rally into the 20-day. Biogen IDEC, piece of garbage. That's where everybody thought it was awesome, and all the pundits were congratulating themselves for telling their clients and viewers and readers and whatnot to buy it here, which was, or to buy it before earnings. But so much for that. Nice gap down there. Gilead to me is looking like a breakdown through the 50 days. So that becomes shortable there, using the 50 day as a stop. Other stocks I'm keeping an eye on. We looked at Yahoo and Baba, which was shortable on the 620. So yeah, you watch these gap up moves on earnings. I watch them all, and if they're shortable, I'll come after them, sure. Apple's now violated the 50-day moving average, which it hasn't done since it last bottomed. So there's violating the 50-day, but it just turns and goes higher. So I don't know, does that mean it's going to turn and go higher now? Maybe. Maybe not. Maybe it's topping and it's a late stage. I mean, that's what it looks like on a weekly chart, so it could be considered a late stage base failure. But again, this is a beloved stock like Facebook that everybody has been told they need to own through thick and thin. In other words, you don't trade Apple, you own Apple, which is the biggest pile of BS I've ever heard in my life. The idea that there are stocks that aren't trades. Every stock purchase, in my view, is a trade, and we talked about this last week. Unless you're expecting to leave it in the form of a dusty old stock certificate in a chest that you leave in your attic for your great-grandkids or grandkids to find when you're dead, every stock trade is a trade. Every stock purchase has the idea of an endpoint where you sell and take a profit and then use the money for retirement or buy a new house, a new car, or whatever. Give away to charity, whatever you want to do with it. But in my mind, to say that there are stocks that you never trade or sell, I think that's just stupid. And so when everybody thinks that, I even heard a quote from Carl Icahn, who's been one of the big pitchmen behind the stock over the last, say, 6 months or so, 7, 8, 9 months, whatever, as it's moved higher, but not that much higher, 10%. 15, 20%, I don't know, not too much on the upside. He says that he likes Apple because he can sleep at night with it, and whenever it pulls back, he can just buy more. Don't you wish investing was always that simple? I don't think that really is going to be how it plays out, but we'll see. But all I know for now is that Apple was a nice short, I thought, when it hit 130 on Monday, and now it's coming down. And I've covered any shorts in the stock, and it's good for, a Skrilla trade. But that's about it for now. Maybe it's going to rally back to the 50-day where it becomes shorter, or the 20-day. So I'm just kind of watching it right now. But it's all going to depend on what the market does, and maybe the market turns and rallies. The ugly duckling theory comes into play, and you look for those voodoo-type setups or other pullbacks into logical areas of support. And that's where you try to get long some of these names that might be holding in. And when I do that, I try to be as unorthodox as possible. You know, so a really great trade earlier in April was this Tesla trade, you know, and then you could sell it in earnings, and now, you know, here I'm back in the stock on this bounce off the 20-day, and it looks like you're going to definitely get a pocket pivot volume signature. If the stock can close up, that would probably be positive. If it closes above the 10-day, you might look at it as a supporting type of pocket pivot. But it's still in flux right now. So we're barely just crossing the halfway mark for the day at 9:46 a.m. my time here in California. When someone says stock X, I love this comment. This is a great comment from Ken. When someone says stock X is a stock to hold and not trade, what they mean is it's too hard for them to trade. Agreed. Dan Amos is touting Aflac stock in my small Georgia town based on its 30 years of growth. I hope people don't listen. What is Aflac's symbol? AFL? Yeah, there it is. Well, stock's trying to come out of the base, so who knows? I think they have an ugly duck. I don't know about an ugly duckling, but it is a duck, isn't it? Is that thing a duck, Dr. K? You never seen those commercials. The Aflac commercial with the duck. It is a duck, right? It's not a goose, right? Okay, it's a duck. Yeah, Aflac. Okay, sure. Now I get it. I'm slow on the uptake. What can I say? They have an ugly duck, whereas we like to use the ugly duckling theory to buy stocks when they look ugly, but are in positions where you can construe as sort of a buy point based on logical pullback. Anyways, somebody says yes, it is a duck. Good. I am confirmed. That is one confirmed duck, ugly duck, not an ugly duckling, however. All right, let's look around some more here. Save was a nice little short, I thought, the other day on this break, and I actually made a little skrilla shorting this thing, a couple of bucks. Whoopie-doo. Baidu has been just a disaster. This was a good short. You had an undercut of all these lows, even this low here. See that? And then you rally up, and now if you're using a 620, you can see this rally on an undercut and rally. It doesn't quite get to the 50-day, but it does get very close to the 10-week, so it's close enough for me. Using the 620 chart, you get short the stock there. You get some points out of it. So Livermorian points. I'm seeing Tesla push up over 229. Why don't you guys push it up higher for me? I'm thinking this thing could get to 240 in a big short squeeze if the market's able to continue higher. But, you know, can turkeys fly in a hurricane? Depends on which way the hurricane is moving and which way they're trying to go, I suppose. Let's see. What else? LCI, you know, this Lanet is done. But again, here's the roundabout. Here's the base, the roundabout pocket pivots. We told you all about all of these, and this was the best move. When it breaks out through the top of the cup base, which is about here, it runs up a little more, and then it tops. And that's it. And that's all you get. No more buying the base breakout here and making big money. So, you know, poor chumps thinking that you can buy base breakouts and it's all magic. 7 simple letters that you can make tons of money on. Yeah, you better hope that you have a big market wave helping you at the same time, because if it's choppy and sloppy, this is what you get. And I hope people are waking up to all of that, because otherwise it's costing you a lot of money. You know, Facebook, a breakout, highly touted breakout has failed. Apple, a highly touted breakout has failed. Twitter, a cup with handle breakout here has failed miserably. LinkedIn, another breakout. And at least you could handle this better if you're treating this as a viable gap up and using the low of the gap up day as your stop. You're out in here, you know, somewhere in here, and now you're not sitting through all this crap. If you're buying the breakout as a breakout and it pulls back and you think you're going to buy because it's within 5% of the breakout range and kaboom, you're stuck there. That's what it looks like on a weekly chart. Ugly stuff. Ugly. Let's see. CMG. This is a nice gap down move. Could have been shorted on the shortable gap down principle, and it's just continuing lower. Some little blip up into the 10-day moving average. Maybe that's a short. It's going to depend on what the market does from here. And I tend to think the market is in a bounce zone, but you never know for sure. So you got to be ready to move with it. Or the other option is cash, right, Dr. K? If you want to just be in cash or holding a lot of cash in some smaller positions, then maybe that's better. Would you be? Nothing wrong with
that, especially in these challenging environments. And these environments might not suit your trading style, in which case it is better to sit out more on the sidelines than you're used to doing. So at least then you're protecting your capital.
Yeah. Short LCI from 4 days ago. Hang on for a move to the. So somebody short this one. That would have been a good short because here's your late stage failed breakout. Wait a minute. No, that would be here. But once it breaks the 50-day, to me, that's when you failed. But now, as you're coming in here, you're starting to fail. Resistance at the 10-day, boom. So if you're short here 4 days ago, that's a great short, and I congratulate you on that. So it's nice to see people pull something off where they're thinking on their own based on things that they've learned from us. That's I find it personally pretty rewarding. So I like to see this. So the question is, do I hold? I mean, you could, if that's your price target, sure. Why not? But it could also come up on top of, say, undercut this low right here, and that might not quite get there. So the other thing to do is keep an eye on the stock on the weekly. But it looks to me like that's where it's headed. So, you got plenty of breathing room here. You could even just take a profit here. We're shorted up close to 61 and change. You've got about 10% profit right now. So that's very nice. Well played. Well played. I like that. Have I actually ever complimented anybody on these webinars? Usually I beat everybody up, so. Oh well. Let's see. Let's watch some of these things. You can see the Splunker kind of trying to move up. It's up a little bit more. Fortinet, I'm watching these in real time. Trying to come up a little bit. Maybe that is a buy. Here. Nice and tight. LinkedIn, toast, shortable gap down, yes. Is it going to hold that? I don't know. It's basically trying to rally no volume. But this thing's done. It's toasty. GWPH, nice run up, pulling back, retracing about half of that move, holding along the 20-day. Are earnings out yet? Let's check this real quick. Earnings come out 5/11. That's next week. So, earnings roulette. It would have been better to buy this and sell into this somewhere in here, and then hang out and wait to see what happens after earnings. So, but that's the way this market works. The whole issue of having to sit through earnings, you really need to have a big profit cushion, and the brutal thing is that you can have a big profit cushion and see it disappear on earnings. I'm sure people who bought Qualis, say down here on the breakout and held it, or bought pocket pivots or whatever in here, they thought they were doing pretty well because they probably had a 10-15% profit in the stock as it was here going into earnings. So they figure, I can sit with it, and then you just get creamed like that. LinkedIn, same thing. Twitter, same thing. So it's a dangerous market. I still advocate having them open up or announce earnings during market hours, regular market hours, and be more diligent about publicizing the actual date and time of the release. So, love the insult name. I use most of them. So yeah, moron is one of my favorites. So, mostly because a lot of people don't really know what to make of that word. They hear it. And let's face it, the vocabulary of the average American is pretty dim. So moron, they look at you like, what does it mean exactly? So, anyways. By the way, I just want to point out, for those of you dumb gringos and gabachos who were celebrating Cinco de Mayo, in Mexico, they don't really celebrate Cinco de Mayo, just so you know. I think there's one state, the state of Puebla, which may celebrate it, but Mexicans don't really pay attention to Cinco de Mayo. I think it's a holiday. It's basically a beer holiday where you see a bunch of ads for getting drunk on Cinco de Mayo, a lot like St. Patrick's Day in the United States. So just so you know, all those skits you used to have to do in elementary school is all for naught. It's not necessary. Anyways, where are we? How about let's look at some of the other big NASDAQ names. Amazon hanging along the 10-day, but the Bible gap up failed in short order. Google is below the 50-day, starting to look, I don't know, this thing's looking like a late stage failed something or another, but it's really not breaking down. Intel, not going anywhere, just a big chip stock leader. Microsoft, gap up on earnings, not going anywhere. Netflix we're looking at, it's hanging in there. So, that was a good Livermorian trade, short trade for points over the prior couple of days, but I think that may be all of it. Price line, gap down, but look, it's holding the 50-day moving average. So anyways, any other exciting questions here before we wrap it up? Well, I'm watching Tesla here, so it may... Hey, Dr. K, if this thing turns blue and we get a nice... you're definitely going to get a pocket pivot volume signature here. Would you call that a pocket pivot?
Well, in context, I guess, of the chart...
it's trying to come up the right side,
it's rounding out the right side of its base and everything. It's just on a technical level, it would be a pocket pivot, actually.
Yeah, well,
but on fundamentals... Yeah, fundamentals don't make me comfortable with this company. It's had its big run, but it faces extreme competition. I know, Elon's very, very innovative with things, but I'm still not convinced, and I would want to actually see further price confirmation going on before I got interested in the stock again. So yeah, well, let's just see how it plays out today and what ends up happening. But this is motivated. The high volume is motivated by the earnings report, because you always get high volume days. The time on the day after the company comes out with earnings,
right
after the market. So it's a bit exaggerated, the volume here. So I wouldn't jump on it. I think it's too premature.
Well, I've been buying the stock since it was down here. So in my view, I view all this action as confirmation of the strength that it showed here. That's how I look at it. And the other thing is, I think they're going to just sell tons of these batteries, because I hear there's a rumor that they're going to include an Elon Musk action figure with every home battery that you buy. And if that isn't a big seller, I don't know what is. And you
wow, you know what? My fundamental analysis did not include that. That's
that's what I'm saying. You're kind of missing the boat on this one, and I understand also that when you pull the string, it speaks, and it says worldly, profound, futuristic things, and it's just for hours of home entertainment. And not only that, you got the power to run, all your utilities with it, and the battery and so on. I think it's a winner. Buy it, Mr. Gecko.
So yeah, if you're day swing trader, and you can jockey into these positions quickly, but overall, as far as the pocket pivot concept's concerned, I think that if it finishes the day strong and it's up for the day, it doesn't interest me yet. I'd like to see further confirmation, and if you want to buy these on weakness, you wait for a volume dry up of some sort, but it needs to put in a little bit more work in its base before I'm gonna try it out again.
All right. Well, I already thought it was buyable close to the 200, so I have a different perspective.
Right. Everyone has to understand, your style, and they know your style from your very specific description. So if anyone wants to trade that way, yes, it's a viable way. It works very well.
So you don't think it's going to 300 anytime soon, then? I gather.
Not anytime soon. Now, if it does start rounding out and starts to exhibit some real price strength, as it completes the right-hand side of its base, and I am going to get interested again, because, again, that battery argument is an interesting one, but I remain unconvinced as of now.
Okay.
But things change.
Well, I own it, so I'm somewhat convinced. But I've already had, Bill O'Neill used to say a lot of times you view a stock based on your own experience with it. And
that's true.
And so I view it positively, because I've made money on the upside with the stock over the last month or so. But in terms of evaluating it here,
it brings to mind one of the traders that used to be one of O'Neill's right-hand guys before I was invited in, and this is back to 1996.
Before I was invited in, you mean?
And well, you weren't even at the company, and I remember his time frame was very much like yours, and he did very, very well. But he used to say to me that I'm buying. Yeah, I'm buying when he's selling. See, right. So he'd get interested in stuff that I might not ever get interested in, but he's making money off it, off the 2, 3, 4 day pop. But then what he said was, well, trending markets, you're always going to make more money, and every year I always outperformed him. But it's just a different way to skin a cat. And in this kind of market, this is a Dan Morris kind of market, and hopefully he's doing well with this sort of environment.
Well, it's actually a Gilmo type of market. So, anyways, that's how I look at it. An ugly duckling market, definitely.
Yeah.
Anyways, all right. So there you have the debate on Tesla. Inconclusive. We'll see what it does. Fun to watch. That, and also watching the U.S. dollar trade against the Japanese yen, which nice long trade there. Anyways, that's all we have. What does the Dr. K market look like? 1990s would probably be a good. Even a year like what 2007 was good. 2011 was not bad. Last year, 2014, you had some nice trending moves. I mean,
Yeah.
that's what more of a trending market. So otherwise, you got to be trading like a madman.
Dr. K market is a home where you can hit at least one or two grand slams. In other words, it's going to be one or two stocks that do very, very well and give you, the returns that are going to make all the difference in your account. And statistically speaking, in non-QE markets, you're always going to get one or two of these trades every year, and that's going to put you up over 50%, if not over 100%, if you manage to trade well. So, QE markets are definitely not my favorite markets. Yeah, they're pretty exhausting, I think, for people.
All right,
yeah, no, you do Teslas, like it had its day, and there are the stocks, one or two stocks that I do well with that make all the difference in my portfolio, but not to the tune of 100% anymore because it's just a different environment. So I'm all for the Fed starting to hike rates and just killing this whole QE concept once and for all. But we'll see when that happens.
All right, on that note, we'll call it a day, and thanks for showing up, everyone. We'll catch you next week. Take care.
So long, everyone.